I'm walking into this with all engines revving, ready to drop truth bombs about the massive shockwave that's just detonated across the car market. Ram collapse isn't just a hiccup, it's a full-on meltdown that's shaking the very foundations of automotive stability. Imagine a world where supply chains fracture, demand evaporates, and pricing dynamics matter across dealer showrooms like paint on a canvas, every brushstroke bolt. Chaotic, unforgettable. What's the trigger? It's a triple whammy. 1. Whispers. That Ram's backlog just disappeared overnight, replaced by a yawning chasm of unsold inventory. 2. Rumors stirring faster than tires on ice that demand is plummeting across the board, not just for trucks, but sedans, SUVs, hybrids. Consumers are holding their cards closer to their chest, dealers are staring at unsorted C-pans of unsold stock, and manufacturers everywhere are scrambling to avoid getting caught in a domino collapse. Here's the kicker: the bombshell. Insiders are whispering that the collapse isn't due to soft demand, but a strategic ritual. Ram is intentionally throttling output while it pivots to new electric truck launches, aiming to dramatically reset pricing, margins, and consumer interest. Dealers are being caught flat-footed, forced to reinvent finance packages, offer extended incentives, or risk being swamped in clearance bins. This isn't a seasonal slump, it's a calculated pivot with seismic consequences. Believe it or not, this shift is already rippling through Wall Street. Analysts are racing to rewrite valuation models. Investors are tuning their ears to the whispers. If Ram plays its hand right, this could be the end of the bargain hunting era and the dawn of a premium electrified identity. But if they mishandle it, well, we're staring down a potential freefall that could drag the entire market into a value slump. Dealers feel the tectonic plates shifting beneath them. Forget cozy monthly targets, they're staring at new dynamics where high-margin orders matter more than volume. Traditional financing isn't going to cut it. Lease terms are morphing overnight, and buybacks, yeah, they're being thrown in as lifelines. Consumers, they're on the fence. They're watching crash reports spin into clickbait headlines. Fear sells, uncertainty paralyzes or pushes buyers toward brands that look like they've got a plan. Meanwhile, brands watching from the perimeter are sharpening their smirks. There's a golden opportunity here for the leaner, the cleaner, the electrified competitors. Take a breath. What if Ram's crash is really the opening for a broader market makeover? One where agility trumps legacy, where sustainability reshapes supply, and where the shift from how much can you haul to how far can you go on a charge becomes the new yardstick. Is it bold? Sure. Risky? Absolutely. But this is where markets morph. In chaos, clarity hides in plain sight. Ram collapse might not be about failure. It might be about rewriting vehicular identity for the decade ahead. And here's where it gets even more unsettling: consumers are waking up to the smell of opportunity. Prices that were inflated sky high just months ago are starting to wobble, and buyers who've been sitting on the sidelines are suddenly sensing leverage. Picture this: dealerships with rows of unsold Rams, each one eating into margins, each one forcing managers to consider slashing prices just to move metal. That's when the psychology flips. Shoppers who were once terrified of markups now walk in with confidence, knowing the power dynamic has shifted right into their hands. But the bombshell announcement isn't just about trucks gathering dust. It's about the entire industry reevaluating the rules of engagement. Ram's pivot to electrification isn't a side project anymore. It's the central strategy. They're betting the farm on the idea that tomorrow's truck beer doesn't want horsepower alone, they want silence, torque, and the kind of futuristic tech package that makes old-school V8 South look like relics. This gamble puts pressure on every other automaker, because if Ram manages to position its EV trucks as the next American workhorse, competitors that hesitate could be left holding outdated PLAYBOOKs. At the same time, suppliers are feeling the squeeze. Battery contracts are being renegotiated, chip allocations are getting redirected, and factories that once churned out engines are facing the grim reality of either retooling or shutting down. That ripple effect means job markets aren't safe either. When Ram shifts, the suppliers shift, and local economies tied to those supply chains start to tremble. For some communities, this collapse isn't just about cars, it's about livelihoods. And yet, the stock market sees something different. To investors, chaos equals opportunity. Analysts are whispering that if Ram can ride out this storm and come out the other side with a leaner inventory strategy and a sexy EV lineup, their valuation could skyrocket. But here's the catch. The road between collapse and comeback is littered with failed promises, overhyped launches, and customer skepticism. If Ram falters even once, rivals like Ford, Tesla, or Rivian will pounce and eat their lunch. So the real question becomes, are we witnessing the start of a long, painful decline for Ram, or the brutal but necessary reset that catapults them into the future? Every move from here on out matters, and the next announcement from Ram could either calm the waters or send another shockwave crashing through the market. Truck owners are already lighting up forums and social media, venting, debating, and speculating like never before. Loyal Ram drivers, the ones who proudly flaunted their Hemi badges and diesel torque charts, are now caught between defending the brand and questioning whether this is the moment to jump ship. Some see the collapse as betrayal, a sign that Ram is abandoning its roots in pursuit of shiny electric dreams. Others view it as evolution, the kind of painful step that proves Ram is serious about survival in a changing world. Either way, the conversation isn't quiet, it's loud, passionate, and shaping public perception in real time. Small businesses are feeling the shock on another level. Contractors, farmers, fleet operators, they don't care about market theories. They care about trucks that start every morning and pull their weight without drama. For them, Ram's collapse isn't an abstract headline. It's a logistical nightmare. If reliability gets questioned, if wait times for parts grow longer, or if pricing swings wildly, that uncertainty hits bottom lines, and when small businesses start looking elsewhere, the ripple effect grows into a wave Ram cannot afford to ignore. Meanwhile, competitors are circling like hawks. Ford is using the moment to pump confidence into its F-Series empire. Tesla is seizing headlines by teasing Cybertruck dominance, and Rivian is whispering about being the quiet disruptor that doesn't need drama to win trust. Each brand sees Ram stumble as the perfect opening to lure frustrated buyers into their own ecosystems. It's less about stealing customers one by one and more about establishing themselves as the safe bet while Ram tries to patch the holes. But what makes this collapse different is timing. Consumers are more informed, markets are more volatile, and attention spans are shorter than ever. A single misstep, a botched announcement, or even a poorly received commercial could tilt the narrative overnight. Ram is trying to balance on a tightrope stretched between legacy and innovation, and the wind is picking up. One bold move could make them the hero of the industry's next chapter, but hesitation could make them the cautionary tale. And here's where the story gets even sharper. Wall Street isn't waiting for clarity. Investors are moving capital if tomorrow's truck market has already shifted. Hedge funds are eyeing Ram as both a threat and an opportunity, while analysts dissect every production number like it's a secret code revealing the future. The tension is palpable, and the stakes couldn't be higher. Wall Street's read on this collapse is ruthless. Numbers don't care about brand loyalty, they care about survival, and right now Ram is testing investor patience like never before. Analysts are running scenarios that look more like battle plans than forecasts. Some say Ram could rebound stronger than ever if it nails the EV transition, while others warn that one wrong step could shave billions off Stellantis's market cap. Every quarterly report, every production figure, every leaked memo suddenly feels like a domino that could tip the whole structure. But investors aren't just reacting to Ram, they're watching the entire auto sector through this lens. If Ram stumbles, it signals weakness across the truck market, and that sends ripples into financing companies, raw material suppliers, even the used car market. A collapse in confidence here doesn't just dent Ram, it can pull valuations down across Ford, GM, and even electric-first brands like Tesla and Rivian. That's why the stakes are so brutally high. What looks like a brand crisis might actually be a sector-wide trigger. Meanwhile, consumer buying habits are shifting in real time. With headlines screaming collapse, potential buyers are hitting pause, calculating whether waiting 6 months might get them a better deal. Leasing suddenly looks smarter than buying, and used trucks are getting a second wind as cautious buyers shy away from making big-ticket purchases in an unstable market. Every delay in consumer confidence magnifies the problem for dealerships already struggling to move stock. And this is where psychology starts steering the wheel. Fear spreads faster than facts. Even customers who haven't followed the details of Ram's announcement are picking up on the energy friends saying don't buy now. The market's crashing. TikTok's warning that truck values are sinking. YouTube channels dissecting every rumor. That chatter shapes reality. If enough people believe the collapse is real, Then it becomes real, no matter what Ram tries to say in response. At the same time, brand identity is under siege. Ram built its reputation on toughness, dependability, and a kind of rebellious confidence. But when collapse headlines dominate, that image erodes, and rebuilding it isn't about one flashy ad campaign, it's about regaining trust at the ground level. Every interaction with a dealer, every service appointment, every whisper of reliability either rebuilds the image or tears it down further. And here's the kicker: the next move Ram makes could redefine the battlefield. If they launch their EV lineup with a product that actually delivers serious range, towing power that rivals diesel, tech features that feel futuristic, then the collapse flips from disaster to a dramatic reset. But if the launch underwhelms, if the trucks can't live up to the hype, then we're looking at more than a stumble. We're looking at a full-on implosion that drags the brand into uncharted territory. Ram's EV gamble is the razor's edge they're walking on. For years, the conversation around trucks has been horsepower, payload, and torque numbers that echo in every commercial and resonate with a loyal base. But now the spotlight shifts to battery range, charging times, and tech integration. It's a culture clash as much as it is a product shift, and Ram has to convince its toughest critics that electricity can haul, tow, and dominate just like gasoline ever did. If they nail that message, the collapse transforms into a rebirth. If they miss, the brand risks alienating both traditional buyers and the EV-curious crowd. And here's the challenge: execution. On paper, Ram's EV lineup looks ambitious, bold, ranges, rugged styling, and promises of innovation. But the reality of production is a battlefield. Battery supply chains are fragile, charging infrastructure is patchy, and cost efficiency is still elusive. Every competitor has already stumbled at least once: Tesla with delays, Ford with scaling headaches, Rivian with production bottlenecks. Ram doesn't have the luxury of those mistakes. Not while the word collapse hovers like a storm cloud above their name. Dealerships are stuck in the middle of this high-stakes gamble. They're staring at lots filled with unsold combustion trucks while preparing for EV models that may or may not arrive on time. Their sales teams are tasked with selling a future that isn't fully here yet, while also trying to move the present inventory that feels like it's aging by the day. That tension is pushing many dealerships to slash deals, pile on incentives, and whisper to hesitant buyers, if you want a bargain, now's the time. The used car market, on the other hand, is buzzing with unusual energy. Buyers who fear EV growing pains are leaning harder into lightly used combustion models, treating them as safe baits while the industry experiments. That's pushing certain trims and configurations into hot demand, while others collect dust. It's a split market, part opportunity, part warning that tells us the collapse is reshaping demand patterns in unpredictable ways. Suppliers are watching. All of this with clenched jaws. A pivot this massive forces retooling costs, layoffs in some sectors, expansions in others. Steel plants, battery factories, chip makers, they're all tethered to Ram's fate in ways most consumers never think about. If Ram surges, they thrive. If Ram falters, contracts dry up, jobs vanish, and entire local economies stumble. That's why insiders call this collapse a domino event. It doesn't just knock over one company, it threatens to rattle the whole chain. And yet, despite the chaos, there's a strange sense of opportunity hovering over the industry. Collapse clears the table, wipes out complacency, and forces innovation faster than comfort ever could. Ram's pain could be the spark that accelerates the truck market into its next era. One defined not just by horsepower bragging rights, but by a complete redefinition of what it means to own a vehicle in the 2020s. Dealerships are fighting like their survival depends on it, because it does. Rows of unsold Rams aren't just metal and rubber, they're frozen capital sitting on asphalt. And every extra day those trucks sit costs money. So dealers are deploying every weapon in their arsenal: deep discounts, zero-interest financing, extended warranties, even aggressive trade-in bonuses designed to pull hesitant buyers off the fence. Some are going as far as offering buy now, pay later gimmicks, trying to sweeten the pot before the EV wave crashed onto their lots. The pressure is so intense that dealers are becoming laboratories of innovation, rewriting the rules of how cars are sold. But adaptation isn't just about numbers, it's about trust. Salespeople are being forced into new conversations they never had to master before. They're not just talking horsepower and towing, they're suddenly explaining battery range, charging, networks, software updates, and resale values in an untested market. For dealerships that get ahead of this learning curve, the collabs might actually create long-term loyalty. For the ones that drag their feet, buyers will sense the hesitation and they'll walk straight into the arms of competitors who project confidence, and this cultural reaction is where the story gets fiery. Truck enthusiasts, the ones who live and breathe torque charts and swear by V8 South, are not sitting quietly on the sidelines. YouTube channels, podcasts, TikToks, and truck forums are ablaze with debates. Some voices argue Ram has lost its soul, selling out the very people who built the brand's reputation. Others counter with excitement, saying this is exactly the shakeup needed to keep Ram relevant in a decade where gas power is no longer king. The clash is emotional, raw, and it's spilling into mainstream conversation in a way automakers rarely. Provoke.influencers are capitalizing on the moment, too. Content creators are filming lot after lot of unsold Rams, stacking up thumbnails with titles like "The Truck Collapse Nobody Saw Coming" or "Why Dealers Are Desperate Right Now." Millions of eyeballs are feeding on that narrative, and it's shaping public perception faster than any corporate press release can repair. The collapse isn't just an economic event, it's a cultural storm where memes, headlines, and hot takes carry as much influence as financial reports. And while enthusiasts argue the average consumer is quietly recalculating, families that once stretched budgets to snag a brand new truck are now weighing whether the smarter play is to wait for price drops or pivot toward a competitor with better financing. Small business owners are checking spreadsheets twice before pulling the trigger on fleet upgrades. Ram's collapse is making people second-guess the assumption that trucks are always a safe, stable buy. That's a dangerous place for any brand to be, because once confidence cracks, rebuilding it takes years. Yet this storm of doubt, debate, and disruption also sets the stage for one decisive moment: Ram's next major move, if the company can shock the market with a product reveal or an incentive program so bold it flips the script. The collapse could turn into a comeback story for the ages. But hesitation, silence, more mixed signals? That's when collapse hardens into decline. Globally, the collapse is echoing far beyond American highways. International markets are paying close attention, because Ram isn't just a domestic player, it's a brand tied into Stellantis's worldwide strategy. In Europe, where electrification mandates are tightening like a vice, Ram's stumble is being interpreted as a test case for how quickly legacy truck makers can pivot. If Ram fumbles the EV rollout, regulators and competitors abroad will use it as proof that American automakers can't adapt fast enough to a rapidly electrifying world. In emerging markets, the shock has a different flavor. Countries in South America and Asia that rely heavily on rugged trucks for agriculture, construction, and infrastructure see Ram's collapse as a warning sign. If production slows or prices spike, those economies feel it directly in the cost of moving goods and building projects. What looks like a brand crisis in the US has the potential to disrupt trade lanes, stall regional growth, and give competitors like Toyota or Isuzu the perfect opening to expand their footprint. Investors overseas are recalibrating as well. Global funds that once saw Stellantis as a stable bet are now rebalancing portfolios, redirecting capital toward brands that appear more insulated from volatility. The collapse is shaking not just investor confidence in Ram, but in the broader idea of whether legacy automakers can transition smoothly into the EV era without leaving a trail of economic fallout. That's why this isn't just an American story, it's becoming a global case study in risk, timing, and adaptation. And culturally, the collapse is forcing a shift in how American trucks are perceived worldwide. For decades, Ram represented a certain archetype: bold, muscular, built to dominate. But with the headlines painting collapse and uncertainty, that image is softening into one of vulnerability. International buyers who once saw American trucks as untouchable icons are starting to ask if the myth is bigger than the reality. And perception, once damaged, doesn't just stay local, it travels fast across borders. Meanwhile, global competitors are licking their chops. Chinese manufacturers, already ramping up affordable EV trucks, see Ram's turmoil as the perfect moment to slide into export markets with lower-cost alternatives. European automakers, armed with green credibility, are positioning themselves as the reliable future-proof choice. Ram's collapse isn't happening in a vacuum, it's creating a vacuum. And history has shown that when one giant stumbles, others rush to fill the space. And this raises a deeper question: Is Ram's collapse a warning shot for every legacy automaker tied tightly to old systems, or is it the painful but necessary pivot that proves reinvention is possible? Around the world, boardrooms are watching closely because the lessons learned from this collapse will shape how every automaker handles the seismic shift barreling toward them. Inside the boardrooms, the pressure is suffocating. Executives are juggling to ticking clocks at once, one counting down the time they have to stabilize the current collapse, and another marking the window before EV competitors completely seize the narrative. Every decision is being scrutinized, from production schedules to marketing campaigns, and one wrong call could cement Ram's decline in history books. They know the collapse headlines are bigger than the reality right now, but perception has a way of becoming truth if not countered with bold, decisive moves. That's why the upcoming announcements carry so much weight. Ram isn't just releasing trucks, it's releasing lifelines. The leadership understands this is more than a product pivot, it's about reasserting control of the story. If they show strength, innovation, and confidence, they can flip collapse into comeback. If they hesitate, the momentum slides away forever. The stakes are brutal, but so is the opportunity, and that's where this chapter closes. The collapse is real, the fallout is spreading, but the ending hasn't been written yet. Ram stands at a crossroads, with the eyes of the world, the wallets of consumers, and the judgment of investors all bearing down at once. Whether this moment becomes their downfall or their rebirth will depend entirely on what happens next, and make no mistake, the entire car market is holding its breath, waiting for Ram's next move.